Hi guys, hope you're good. Just a very quick analysis of NASDAQ 100. So just to recap, in my previous videos I spoke about this. Just bear with me. In previous videos I spoke about um, this particular candle over here, which is a bearish candlestick with a small body and a long lower wick. And I mentioned that there's a whole lot of liquidity at that level, and that in the future we might see price actually coming down to this candlestick over here. As I say, the reason is because there is a lot of liquidity sitting at this point. Nonetheless, this area is still very much far from where price currently is, and what may actually happen is price from where it is may retrace to the top. I also spoke about how this candlestick, or the current monthly candlestick, um, came down to that level because of the previous monthly candlestick, and that is because the previous monthly candlestick, where it ends, had a whole lot of liquidity there, and this entire move of the current candlestick to go down was to grab that liquidity, right? So let's continue. Let's see. So this is the monthly chart, and at this point I don't see anything else that is particularly very interesting, except that we also have this level over here, which is a strong level of support, which may be tested in the future. Nonetheless, we will see how things progress over the next couple of weeks and months. So what I'm going to do now is head over to the weekly chart. So here we are on the weekly chart. On the weekly chart, I had spoken about how we have an M formation in this region with the neckline being over there. Price broke the neckline, went back to retest it, and I said that we would have looked for further selling opportunities at this point, and price went down, right? I think I also spoke about the fact that we at this point had a W formation over there. I spoke about this point over here where price broke the W, came back to retest it, and then push further up. I spoke about how this area is also a very strong area of support. However, the area was broken, making it no longer relevant. Let's see. What else do we see on this chart? On this chart, let's look at actually last week's monthly candle, or rather last week's candle, which is this candle over here. It is also a bearish candlestick with a small body and a long lower wick. So that immediately tells us that where that wick ends, we have a whole lot of liquidity sitting there, and that as much as at the moment it looks as if price is getting ready to go up, I believe that in the next coming days or even weeks we will see price come down to this level to grab that liquidity, because there's a lot of money sitting at this level, and by now we all know that the market always goes to where the money is sitting at one point or another, right? So what I'm going to do now actually is just add a line to where that particular candlestick ends, as it's a very important area, and we just need to keep in the back of our minds that we have a liquidity candlestick there, and it needs to be grabbed by the market. So let's continue. So what else do we see? Over and above that, we also have this area over here. Just bear with me, guys. Let's see. We also have this area over here, which is a strong resistance area, and that is because we had a touch there, we had a touch there. Well, at this point the market went through the line, and we had another touch there. So it may happen that in the future price may come up to this point, bounce off here, and then push further down. So we just need to keep that area in the back of our mind. And I spoke about how this area is actually that M formation, and this is the neckline of that M formation. Nonetheless, let's keep moving forward. So from here, what I'm going to do actually is head down to the daily chart. So here we are on the daily chart. So what do we see on this daily chart? On the daily chart, we seem to have a very big gap there, and that tells us that in the future the market has to get to that point, and that is because that gap is carrying so much money there, and the market needs to activate that money. So we will in the future see price coming to that level. So before we continue actually on this daily chart, I'm going to add the daily channel. Just bear with me. Let's see. I always say that we just need to ensure that our channels or whatever instruments we add onto our charts are as accurate as can be, just to ensure that at the end of the day, when we do ultimately execute, our execution is also accurate, right? There we are. So let's continue. So there goes our daily chart. Let's see. There we go. Right. There goes our daily chart. So what else do we see on this daily chart? What do we see on this daily chart that is interesting or significant? So over and above us having just bear with me, over and above us having that huge M structure that I spoke about on the weekly chart, with the neckline being there at that level, we also have this area over here which has a neckline over there. We have an M at this region with the neckline being there. And I usually say, guys, that when it comes to M formations, that once it has formed, would love to see price break the neckline, come back to retest it, and then push further down. So that may happen where we see the neckline of this M formation being tested at this level over here. So I'm just going to add a neckline as well, so that we don't forget about the fact that we have a very important M structure there. Just bear with me, guys. Let's see. So there goes our M structure. The next thing that I'm going to do actually is add the Fibonacci retracement tool, just to see if the neckline of this particular M structure aligns with any of the key levels that we have on the Fibonacci retracement tool. So just bear with me, guys. Here we go. Let's see. So it seems as though the 50% as well as the 61.8% Fibonacci retracement zones do not align with the neckline. So that's fine. We can just delete this fib zone, or this fib tool rather. When it comes to Fibonacci, by the way, I prefer using the 50% as well as 61.8% Fibonacci zones. I know that some people prefer rather the 71 as well as the 32 zones as well. So let's keep moving forward. So we've got a neckline on the daily chart. Is there anything else of value that we see over here? I just also think I must point out that we have this candlestick over here, which is a bullish candlestick with a small body and a long upper wick, which tells us that at this level over here, we might have some liquidity sitting there that needs to be triggered by the market at some point. So what I'm going to do now actually is just add a line to that candlestick. We just need to ensure that we do not forget about it. Just bear with me, guys. There we go. We've got liquidity rather at that level. So that's it, guys. And as far as the daily chart is concerned, I do not seem to see anything else that is particularly interesting. So what I'm going to do now is head down to the H4 chart. On the H4 chart, the first thing that I'm going to do is just fix my channel. Just bear with me while I do so. Let's see, just bear with me, guys. Okay, that should be fine. There we go. Right, there we go. Yeah, so there goes our H4 channel, or rather our H4 chart. So now that we're here on this H4 chart, what do we see that is interesting? What do we see that is interesting on this H4 chart? Let's see. So before we continue, actually, what I'm gonna do now is add a channel to the H4 chart. Just bear with me. I would edit in this way. Yeah, so there goes our H4 chart, or rather our H4 channel. There we go. There we go. So what do we see on this H4 chart that is interesting or significant? What do we see? So on the daily chart, we spoke about how we had, just bear with me. We spoke about how we had, or rather how we have an information at this region. However, on the H4 chart, it is expressed as a head and shoulders pattern, with a neckline there. That's what I find interesting. To add to that, I see that actually we seem to have the market creating what seems to be an inverted head and shoulders pattern, with the left shoulder being here, the head being there, and it looks like the right hand shoulder may form within the next day or so. Nonetheless, we also need to keep in the back of our minds that we have this area here, this level here, where we have that candlestick that's sitting there, and the fact that we have a whole lot of liquidity at that level that needs to be grabbed by the market. Um, in my last video, I also spoke about how we had, or rather have, this W formation, and I mentioned that the neckline was broken to the top, and the fact that a lot of traders and investors bought at the second leg of the W formation, and then again on the break of that W structure, or rather the neckline of that W structure. So what I said actually was that this entire move to the bottom was a stop hunt, and that is because when it comes to W formations, people buy there and they buy again there, meaning they put their stop losses just below that W structure. Hence, we saw this whole move to the bottom to grab some money. However, as the market did that, it also left a liquidity candlestick at this point, which means that the market still needs to come here to grab that liquidity before actually pushing further up again, in my humble opinion. Nonetheless, let's keep going forward. So we have this. Okay, let me just actually add a neckline. Actually, in fact, no, I'm not gonna add it because the right hand shoulder hasn't fully formed. So this is actually a potential head and shoulders pattern. It has not yet formed completely. So I'm not gonna add a neckline at this point, but I'm gonna keep going forward. So another thing that tells us that the market may be heading up is the fact that this channel over here has been broken on this side, right? And right now what's probably happening is a lot of people are buying like crazy, and that is because they see a W formation here, with the neckline being there. In their books, the neckline has been broken. Other people bought on the first leg, or rather the second leg of that W structure. So that means that their stop losses are below this area over here, right? um, Let me just redraw that, guys. I just want to be clear. So we have a W structure here, right, with the neckline being there, and I told you guys that when it comes to W formations, people buy here on the second leg of the W, and they buy again on the break of that neckline. So yeah, they buy again on the break of that neckline, and they put their stop losses just below that W structure. And that's precisely what is happening here, where we have a lot of stop losses that are sitting there. So tomorrow, what's likely to happen, or rather in the next coming days, is that just bear with me, guys, is that the market may come down to stop hunt again, to grab all of those stop losses that are sitting just below here, and then it'll also grab the liquidity from this level that I spoke about earlier, and it may form a W and then go up again, right? That's what may happen tomorrow. So or rather in the next coming days. So we need to keep that in the back of our minds. And also, I don't see really anything further here. So I'm just gonna head down to the H1 chart. Just bear with me, guys. So here we are on the H1 chart. So today is a holiday in the US of A. And we can see that the market has been moving sideways. There wasn't really much movement in the market, and that is because of the fact that the um, yeah, that's because it's a holiday, hence the market is moving sideways. And what the market maker is actually doing is he is collecting orders for tomorrow and for the rest of the week. So yeah, guys, that is it in as far as my analysis goes. For NASDAQ, I've got a feeling that we are likely to see price come down in the next coming days to stop hunt those who entered at this level as well as this level, because their stop losses are just below. And from here we might see price either turning here at this level or going down further, and then forming another W at the bottom and then pushing further up from that point, right? So that is it, guys, in as far as my analysis goes for NASDAQ. If you have any further questions or comments, just let me know. Thanks, guys, for watching, and peace out.